Hello everyone, my name's Ian. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 9th, 2022, and we yesterday had a bullish breakout in the cryptocurrency markets, okay? We have a clear bullish breakout here in Bitcoin, and if you look throughout the cryptocurrency space, you can also see some nice bullish breakouts, okay? However, these are bullish breakouts on the small time frame, okay? There are small time frame bullish breakouts, which obviously should lead to high time frame bullish breakouts if our reads are accurate. Now, does it mean 100% we're going to get the high time frame bullish breakout? No. It's always a probabilities game, right? Anything trading related, chart technical analysis, it's playing the probabilities. It's just that now, given this small time frame bullish breakout that we see right here, and what breakout am I talking about? I'm talking about this, right? We had a downtrend here with this zigzag, it looks like, okay, and a consolidation, and right after that consolidation, you got a breakout, okay? And what's important is you end up getting a retest of this level right here, which is clearly a resistance level, okay? So as always, the principles of technical analysis remain. A breakout follows a retest, or a retest follows a breakout, and then the actual larger, more substantive breakout takes place, okay? As a trader, you want to get in the trade ideally at this point, okay? This is why this matters. This matters because it will eventually lead to that. Once this starts, right, it's not a favorable entry point, right? Because the price starts moving too quickly and your risk increases. Let's say it's a fake out and it actually doesn't materialize, then you lose on the trade pretty badly. So this is an ideal entry point for most traders that are interested in going long, not financial advice. I'm obviously looking at a higher time frame for entry, but like let's say you were looking at a small time frame entry point. Okay, so that bullish breakout, very importantly, can lead to the larger time frame breakout, which is this right here. The breakout of this inverse head and shoulders pattern, okay? And I've been showing this on the channel for quite some time. This is very important. And I think this is basically the this is the analysis that most should have. It's the simplest, most straightforward analysis, so it's likely the highest probability. It has the highest probability of playing out. It's an inverse. It's an inverse head and shoulders, right, which is a bullish pattern, and it's confirmed by a breaking of the neckline, which is here, right? So we broke the neckline to the upside, okay? So that confirms the bullishness, and then the final confirmation is a retest of support, okay? So you retest support. I've repeated this so many times on the channel, but it bears repeating. That's it. That's as simple as it gets. That's the analysis for Bitcoin. That's the analysis for most of the cryptocurrency market. Excuse me. You see that bullish pattern? That bullish pattern is quote unquote confirmed. As far as confirmations go, my opinion on confirmations. I don't believe they exist. It's just you increase the probability a tad, okay? But there is no objective firm scientific confirmation of any sort, right? It really depends what your time frame is, what you're trying to do. It depends on a lot of things. Every trader has different rules, has different sort of discrepancies, right? But for me, this is quite high probability, right, to play out. After the retest, Now this is the bullish breakout. Retest, breakout. Okay? And the way it broke out is also very important. So for an analysis of that, we zoom in. So zooming in, this looks very much, excuse me, very much like a 5 waves up, 3 waves down situation, okay? And this is quintessentially, the kind of price action you get in an impulse, right? You get an impulse that's 5 waves up, 3 waves down. The time it takes for the 5 waves and the time it takes for the 3 waves are comparable. The 3 waves come down and retrace between the 382 and the 618 of the 5 waves. That is quintessential bullish sort of impulsive price action. I'll say impulsive price action because you can also see the same thing to the downside, right? So again, were you to take this as a 5-wave sequence, you see right there the minimum Fibonacci retracement has been met. Do you see that? The 382, right? Wave 2 retraces to between the 382 and the 618. You literally just tag the 382 right here before continuation, if this is indeed where we move from, okay? So that's fulfilled. And the other aspect of this is, let's say that this right here, let's see, 1 second. Okay. Let's say, let's go on the 15-minute time frame, just because this is such a small time frame move. You want to get a little more. It's hard to say. I want to say that this is the 5 waves up, because this looks like an ending diagonal. It looks like a concerted wave 5. Okay, this I don't know exactly. I'm just, obviously this is always an educated guess, but that to me seems like it is. And if that is indeed the case, it makes sense. Why? Because remember, the time it takes for the wave movement up is the same time it takes for the movement down, okay? Waves of the same degree are comparable in time and in price. I say comparable, not equal, because you don't always get a 1-to-1, but most of the time you do, okay? So waves of the same degree in Elliott wave theory are comparable in time and in price. And here, what I believe that we're seeing is a wave 1, okay, and then a wave 2 situation. And again, we just proved that that wave 2 retraced. I'm just going to put wave 3, 4, and 5 there as placeholders for the moment, but we're going to build that up. Okay, first of all, let's turn the lines on. Okay, so again, this is a legitimate wave 1, wave 2 situation, okay? Legitimate, because the time fits, right? The time it took for the 5 waves up and the 3 waves down, comparable, okay? We like that. And we reached our minimum 0.382 Fibonacci retracement. Now, the other thing I like is okay, from here what we can do is let's just simply mock out the next wave, right? Which would be wave 3. Why does it say 4 here? Am I tripping? Oh, okay. See, that's the issue with not respecting your degrees. You see, I was so confused. I was like, why is this a 4? This should be, nothing, blank. This is my primary wave. This should be my, I should change the degree here, not to confuse myself. So I'll just go a degree down. I'll call this intermediate. Okay. For those of you who don't know about the degrees in Elliott wave theory, it's how we keep things organized, because everything can be wave 1, and there's so many different waves 2s. You have to specify what degree you're discussing. Okay, here let's just mock out as a placeholder wave 3, and we know that wave 3 typically projects to the 1618, to the 2 Fibonacci extension of wave 1, retracement of wave 2. So let's just put that there. Obviously, we can get an extension, okay? But let's just, again, mock it out. You know. Okay, so that would be like a mock, okay? Not saying that this is going to happen or this is exactly what it has to be. All right, it could be much, much larger, and I do expect it to be at least this. I expect it to be at least something like this, right? Because that is the breakout of this triangle. But I think at least, again, if this is a macro bottom, I fully expect us to go all the way up here, right? And make that higher high. If this is a macro bottom and we are establishing the first impulsive move of the bull market, like I said before, it's highly probable, okay, that this impulse go up and really show the higher high and then come back down, retest, and then continue. Okay, so that is what I'm thinking. But yeah, so it really doesn't I guess if I want to be consistent, because I did put that primary wave 5 all the way up here, maybe we get an extended wave 5, maybe we get an extended wave 3, I don't know. All I know is that, technically speaking, as we stand, this looks like a viable wave 1, wave 2 situation, okay? So I really like that for Bitcoin. That was a bullish breakout for me, although it is not as in your face. Obviously, as a professional trader, as somebody who looks at the charts all the time, every day, like, that is significant. But for most people, it's not that significant, and I can understand why, because it's a minimal move, right? It's a small move that didn't create that much upside. But it's not so much the fact that it's a 3% move to me. What makes it really, really important is the fact that you showed once again that after this retest, you're matriculating upwards, and showing that that's happening is, to me, and the way it happened, right, with the 5 waves up, 3 waves down, okay, that tells me your intention is to continue to matriculate upwards and break this important resistance and make real important moves. You're not going to get the big upside until this resistance is broken, right? Because you have all these buy orders all between these levels, right? Once you reach this level and beyond, now you're in a space where there's not much, right? There's a void. You know, the buy and sell orders are minimal, as you can see, because on the way down, we just shot down and then hit this level. And then on the way up, we should do the same. So that's just the principle, or the principle. It's not an Elliott wave thing, but the principle of balance in technical analysis, right? There's an imbalance here. You rebalance that with an equally balanced or equally imbalanced move, but on the other side. So, you know, it's just like nature, right? Like water, like electricity, like price action likes balance. So that's what I expect. Let us look at the DXY, the US dollar currency index, okay? It is doing what we expected. One moment. So the DXY is doing exactly what we thought it would. It's coming down, and after this this retest of this level, it's breaking down, okay? And it's looks like it's overbought right here on the hourly time frame. So we should expect a move to the downside. Again, why is it important to look at the DXY? Because the DXY is inversely related to the dollar, or sorry, to Bitcoin, to risk on assets, to crypto, right? So if the DXY goes down, Bitcoin cryptos go up, technically speaking, okay? That relationship has been established through years and years. And we show that all the time on this channel. I'm not going to show it again, but just do your own research. You can see the DXY goes down, Bitcoin goes up, DXY goes up, Bitcoin goes down, at least on a monthly time frame. Okay, so the DXY is looking good for Bitcoin to continue to the upside. Okay, that's consistent with our read on the bullish breakout. Bitcoin dominance is also looking to shoot down. Okay, lots of people on Twitter are asking, what's Bitcoin dominance doing? Why isn't it going up? Excuse me. Many people misunderstand Bitcoin dominance. Bitcoin dominance is a function of Bitcoin's dominance vis-a-vis the entire cryptocurrency market cap. I know a lot of people say, oh, but it's a failed metric because it doesn't include stable coins and blah, 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 blah. It doesn't have to be perfect to really show you exactly the story, okay? It doesn't have to be perfect. Bitcoin dominance doesn't, to tell you what's going on, okay? And I'm going to break it down quite simply. If you look at Bitcoin dominance on a high time frame, what do you see? Okay, this is a weekly chart showing Bitcoin dominance from 2017 all the way to present day. What do you see? You saw a move down, okay? Excuse me, a move down, followed by this consolidation. Now, this consolidation was what I want to draw your attention to. This consolidation right here is clearly an intra-wave correction, okay? That's the move, that's the impulse, that is the trend, and this is an intra-wave consolidation. And it looks like that intra-wave consolidation is a head and shoulders pattern, which is a bearish pattern. Now, again, these bearish patterns, head and shoulders, inverse head and shoulders, they're all confirmed by a break of the neckline, okay? What's the neckline? It's clearly here, okay? We're about to confirm this if it hasn't yet been confirmed, okay? So if Bitcoin dominance breaks below this level, it confirms this bearish breakdown, okay? And so as you can see, I do have a technical target for Bitcoin dominance down to 23.9, okay? That's basically showing the story of Bitcoin dominance throughout its existence. And what does this mean? It means that throughout time, during the course of, the entire cryptocurrency market's existence, Bitcoin's dominance has gone down. The importance of Bitcoin, the importance of Bitcoin as an important or a vital principal portion of the entire cryptocurrency market cap declines over time. That's normal. That's natural. That makes sense. I don't understand why people don't get that. Bitcoin started as the cryptocurrency. Over time, other cryptocurrencies were developed. Other projects were refined. Things made sense, and they built on what Bitcoin introduced. People then invested in those projects. Some of them are good, others are bad. But as a result of the development of the space, Bitcoin is less and less important in terms of total cryptocurrency market cap. There is a diversification of the funds of the the market cap in all of cryptocurrency from Bitcoin to other assets. That makes sense. What is confusing about that? People keep asking, why is Bitcoin dominance going down? Obviously, because other assets are taking away some of the total cryptocurrency market cap by definition, right? Like Ethereum came. Ethereum was, a good project. It brought a lot of attention. People invested in Ethereum. It took market cap away. Cardano came. People thought it was cool. Maybe some people think it's bullshit. It doesn't matter. It took capital away, right? All these other assets came. Tens of thousands of other projects, some fraudulent, others not, came, and people directed some investment, retail investment, institutional investment towards those projects. That's why Bitcoin comprises less and less of the total cryptocurrency market cap over time. Why would you expect anything less? Okay, why would Bitcoin dominance trend on a high time frame, right? On a large time frame, why would it trend up? What kind of sense does that make? So other projects would, so in that way, the only way that would happen is if over time the number of projects in the total cryptocurrency space were reduced. But that hasn't happened. Every year we get more and more projects. There's more and more innovation. There's more and more speculation, right? That's just what you get in a new asset class, right? So it makes sense that Bitcoin dominance would continue to go down. And it also makes sense that in a bull market, and you can backtest this on your own, the total cryptocurrency market cap goes up and Bitcoin dominance goes down, okay? Again, in a bull market, the total cryptocurrency market cap goes up and Bitcoin dominance goes down, okay? You want Bitcoin dominance to go down in a bull market. You do not want it to go up in a bull market, right? It goes up in a bear market, okay? Why? Because the total cryptocurrency market cap goes down, okay? And other assets that are more volatile than Bitcoin, they lose market cap more quickly than Bitcoin. But in a bull market, pretty much everything else gains market cap more than Bitcoin. There are new projects that never existed before that gain market cap on top of Bitcoin. As a result, not only does the total cryptocurrency market cap go up, but also Bitcoin dominance goes down. As a result, you do want to see a breakdown of Bitcoin dominance in a bull market. And that's why we look at it. I hope that helps. I don't think it's that hard, honestly, to figure out. I think people are just in denial, specifically of Bitcoin maximalists who want the scenario that I laid out, where all of the assets in crypto kind of fall off and are weeded out and fail, and only Bitcoin is left because they believe it's the superior project and no innovation can be made on top of it or something like that. Something weird. In any case, that's just, I'm just speaking facts in terms of the technicals. And again, it doesn't matter how many times you say, oh, it's a failed metric because there's stable coins and now that changes things. It's like, how does it make sense for the market cap, Bitcoin market cap or Bitcoin dominance to go up if more projects exist? Even you add stable coins, it doesn't matter. The fundamental reasoning of why it goes down is intact. So it should continue to go down. Again, I don't think it's hard to understand. I just think people don't want to understand it, because that would mean their biggest nightmare, that there may be in time, eventually, some assets in crypto that build on top of Bitcoin that may make Bitcoin obsolete or close to it. You know what I mean? Or that may do things better than Bitcoin. God forbid. In any case, so that's Bitcoin dominance. It's going down. That's good. Now, with the remaining time in the live stream, let's go down the watch list. Guys, if you have anything you want me to look at in the watch list, just let me know now. All right. So, Polkadot. This is this a 1-2 situation? Doesn't look like it. Let's see. Maybe it is. Okay, yeah. Just about. Right? Just about. You can see here that the 0618 Fibonacci retracement level is maintained. So that tells me that this 5 waves up and this 3 waves down They're related, okay? Now, how are they related? I don't think it's a 1-2 situation. It looks more like a pivot, like an A-B situation. And then I'm looking for a C that makes this a zigzag, okay? Why do I say that? It's because the time it took for these very clear 5-wave structure to form is a lot shorter than this 3-wave structure. So I believe, given that, it's more likely than not that this is an A-B situation, unlike what you see in Bitcoin. Yeah, so 8 hours up, 21 hours down. Yeah, it's just too incongruous. It seems to me that this is an ABC situation, a zigzag, right? So that's what I see on Polkadot on the smaller time frames. Cardano. This again looks to me like a 5 waves up, 3 waves down situation. That is a really good sign for a bullish breakout, okay? A lot of Elliottians like to get in at the bottom of wave 2 because a lot of Elliottians like to only trade wave 3 because wave 3 tends to be the most impulsive, the longest, right? The most substantive move in an impulse. And that makes sense, and that's smart because wave 1 establishes the trend, wave 2 confirms it, and then wave 3 you ride wave 3. And that's a great way to trade. It does take a lot of discipline, does take a lot of patience, but it's possible, and it leads to high probability results. You know, if you can really identify wave 1 and wave 2 in your trading system. So yeah, I think this is, let's count this as wave 1. And this is wave 2. Yeah, look, you have this time factor that works, right? 5 waves up took excuse me, about 14 hours. 3 waves down took about 14 hours. I really like this as a wave 1, wave 2 situation for wave 3 continuation for Cardano. Okay? Reserve rights. Again, a 5 waves up, 3 waves down situation. Your minimum retracement of 382 was met, I believe. Absolutely. And now you would look at the time factor, and it seems like I would say this is the 5 waves up. Let's say these are the 3 waves down. Looks to me like an A-B situation, a sort of pivot, okay? Just because the time factor's a bit off, but it still could be a wave 1, wave 2 situation. I'm not exactly sure, because obviously wave 1 and wave 2 don't have to be exactly equal, but this still indicates a bullish breakout to the upside, right? 5 waves up, 3 waves down. You're expecting at the very least a C wave, you know, at least another 5 waves up if this is a zigzag, and then that C wave can lead into a proper impulse. Dodo, I'm seeing the same thing, right? You see this throughout the market. Impulses, retracements of that impulse, intra-wave retracements, okay? Again, I believe that you're fulfilling that 0.382 Fibonacci retracement level minimum just about here. And it seems like the time factor is comparable. Looks like 10 hours. Yeah, I don't know. It's possible it's a wave 1, wave 2 situation, but again, it is very bullish because you got 5 waves up, intra-wave correction, you're looking for continuation, whether it's a zigzag or a proper impulse. Ethereum looks like a proper impulse. This looks like a strong 5 waves up, and this looks like a legitimate 3 waves down. Okay, and I think here, let's see. Let's say you start from here, yeah? Yeah, you clear that 382. Time factor, it looks comparable. Just eyeballing it. This just looks like a really nice place. If I'm a trader, I'm adding to my trade here. I'm adding to my trade. Given that that doesn't make the trade too risky, it doesn't increase my stop or my sorry, it doesn't increase my liquidation point too high, right? I want to manage downside risk, but this looks like a really good place to go long, not financial advice. Okay, Zilliqa, same thing. You're seeing this throughout the market. This is why, you know, I said bullish breakout, because this is the beginning. You know, an experienced trader sees this for what it is. 5 waves up, 3 waves down. Most people, and I've said this before on the channel, and I think Ralph Nelson Elliott said this, most market participants do not perceive the move until we get into wave 3. So if this is wave 1, wave 2, this is where your pros get in. Wave 2, bottom of wave 2. Most market participants don't see it actually happening, right? They don't visualize, they don't realize the trend until that wave 3. And they get in late, and then there's a wave 4, and maybe a wave 5. Maybe wave 5's concerted, maybe wave 5's extended, but they're playing with fire getting into that wave 3 because the trend's almost up. Okay, a lot of them get in at wave 4, which is, you know, the trend's really almost up, and then they get smoked on that retrace of your initial break of structure targeting wave 4 of the previous trend. You know, their stops get hit, and then the subsequent right, if you draw this out to completion, the subsequent 3 wave move of this 5 wave impulse, right, they get hit because that typically comes in the region where they entered the trade. Do you see? So the pros win because they get in at wave 2. This is why I'm excited, even though we haven't had that much positive price action, because I spy a wave 2 intra-wave correction. Dogecoin looks to me like this is some type of leading diagonal, right? That is what it looks like to me, okay? But that does still look bullish, right? Nice higher highs. And again, leading diagonal, really hard to really confirm. There's not that much to confirm it with, except the fact that it holds structure in these channels. Litecoin. Okay, again, I think it's quite clear. You can see that 5 wave move, right? And that 3 wave move down. 5 waves up, 3 waves down. This is where the pros get in. Pros get into the trade at wave 2. Most of them. Not all of them. Most of them. Okay? It's just too much risk getting in at wave 1. Your risk decreases getting in at wave 2. At the bottom of wave 2. Okay? So you're likely to really get the meat of the move at wave 3, which is coming up, most likely. Okay, synthetics. Like I said before, this does look to me like a wave 1, wave 2 situation with a running flat. This is your reversal, consolidation, reversal pattern taking you into wave 3. So I think throughout the market, we can see it's likely that we're going into wave 3, some of them going into wave 1, but we're going into impulse. Algorand, same thing here. I think it's clear. 5 waves up, 3 waves down, respecting the 0618 of the prevailing 5 waves. Binance coin, same thing. 5 waves, 3 waves. I'm expecting 3 waves, or sorry, a wave 3 impulse. XRP, same thing. Here is very clear. 1, 2, 3, 4, 5. Here you got a quintessential zigzag, 3 waves down, okay? And once again, you can see, excuse me, that the time it takes for your wave 1 to form, let's say it's here. I don't know. Let's say it starts here. We're going to eyeball this. About 30 hours, or 40 hours, right? 24 plus 16, 40. And then here, 14 hours. It is incongruous in terms of the wave up and the wave down. However, I don't know that I necessarily took the beginning of wave 1 properly. It's hard to say. I'd have to look more carefully to see where. Okay, this is also possibly the start of wave 1 right here. Okay, just a quick read. I don't want to spend too much time on this, but let's say that that's it. And it goes all the way there. Not exactly sure. But what remains here is the fact that you have a clear impulse, right? And you have a clear retracement down to the 382 to the 618 Fibonacci retracement level. So that looks like you're going to get continuation to the upside. Okay? And that's pretty much it. Guys, this is what we're waiting for in the market. I really do believe that this was the beginning of a breakout, a bullish breakout. And again, like I said, we should expect the DXY to continue to the downside, right? And that will spur our move to the upside in crypto, in stocks, and all those risk on assets. So yeah, that's it for me. Hope this was helpful. Hope this was useful. Like, share, and subscribe. And I'll see you guys tomorrow for a quick hit pre-recorded bit of analysis. All right, take care. Hope you have a great Friday and a great weekend. Bye.